Morning, everyone. Welcome to another weekly market video update this week. My name is Tanisha, and I am a relationship manager here at Nexus One. And just a friendly reminder that we do have a seminar tomorrow. I believe today's date is April 8th, so you can expect that for April 9th. And the topic will be covering property and casualty insurance. But let's turn it on over to David.
Hello, everyone. My name is David Mott. I'm an advisor here at Nexus One Financial, Director of Advanced Planning, and here to give another week update in the market. What's going on, what we're looking forward to. This is early before market opening on April 8th, Wednesday morning, and we are a few hours away from a ceasefire that was announced last night. Market is largely positive week to date. Year to date has taken back a lot of the losses we received in Q1. S&P down about 3.5%. Market futures are opening up somewhere between 2.7 to 2.8% right now. But again, with intraday swings of over 1%, that can change pretty quickly. But right now, markets are reacting very positive to the ceasefire that President Trump announced last night. Now, with that said, this isn't mission accomplished. The ceasefire is very ambiguous. Both sides are claiming victory. It is a multi-point plan that still needs to be worked out, gray areas, and when the strait will be opened. While it is technically opened according to the ceasefire, ships are not moving through until they get a lot more reassurances that they will be able to pass safely. Then there are also other Gulf nations that are in the negotiations of this ceasefire, primarily Lebanon. How this shakes out with Pakistan as a mediator for the ceasefire agreement, how the United States and Iran come to agree on these points. Again, step in the right direction, ceasefire announced, but still there's a lot of fog. Want to monitor what's going on, but markets are responding very positively here today. The West Texas intermediaries, Brent, those are two oil indexes from different parts of the region that the world uses to measure oil, dropping double digits. We're in the area of $112 to $113 a barrel. Before the close yesterday, have plummeted to $90 a barrel. So good news coming out of the Middle East in terms of your dollars. But let's take a look at some other items that we have going on in the market as well. So like much of the last several weeks, Iran has dominated the market news, step in the right direction with the ceasefire. Hopefully before too long, it'll become like Greenland, something that was a big talk in the media that we kind of forget about and move on from. Hopefully it keeps moving in the right direction. On tech, big news, Intel, that's had a rough go of it, has spiked recently, announcing collaboration with Musk entities, XAI, SpaceX, to name a few. Intel is partnering with the TerraFab that's being built here in Texas. Significant, ultra high volume, high tech manufacturing facility here in the great state of Texas. Intel has partnered with and has sent that stock roaring, which leads into another good news, a piece of good news that we had last week, the jobs numbers. Jobs came in over 100,000 positions higher than analysts were expecting. A very good tailwind. Most of those are coming from the medical sector, healthcare, and construction. Construction, warehousing sectors are also driving this up. I know there's a lot of worry about AI and job replacement, but it is being offset when it comes to healthcare positions and that construction position. Things like TerraFab data centers are continuing to be built at a high tick, regardless of other geopolitical events. It wasn't all great news. One soft spot in the jobs report is workforce participation. If we take out COVID, we hit a number of 62% workforce participation, lowest since 1977. The driving factor is expected with baby boomers exiting the workforce, and this has been a decreasing number since 2000. This is somewhat to be expected, but we are taking a little bit of a deeper dive. Many analysts believe it's because of the change in the workforce, this new round of tech. Every time we see a big round of tech, those that are nearing retirement tend to go ahead and pull the trigger. So it's pulling in a lot of folks that might have worked for a few more years see a good opportunity to leave, especially if they are in an industry that is vulnerable to AI replacement. So with that said, the jobs report, while it did come out good, we view that as more somewhat positive to very positive, neutral to positive, if you will, on the job front. But again, we are also monitoring that workforce participation, lowest number since 1977. Will that continue or stabilize? Something that we're watching along with analysts in the market. So what we're looking at this week, two big pieces of information come out, and I'm going to go ahead and say three pieces. We talked about the good labor number we had last week. We're anticipating the revision, and they've been pretty big lately. So while the number did come out good, we still think it'll be higher than expectations. There could be a revision that could swing that number as well. Later this week, though, the two new pieces of information are the CPI, Consumer Price Index. That's the good old granddaddy inflation number we are watching, as well as the PCE, another inflation metric that the Fed watches very closely. Difference between the two is there is a lot more in terms of what consumers are actually spending in the PCE, and it incorporates other areas such as rural spending, suburban spending, things of that nature. It's a better metric on what you and I as consumers are actually spending, the PCE, and that's a piece of data that the Fed watches closely to make their decisions on interest rates and how to fight inflation. The reason I mentioned CPI, if the PCE is so great, is it's important this week because the PCE does lag a month. There was a tremendous oil spike in the month of March. The Consumer Price Index, CPI, will incorporate that oil spike. The PCE number that comes out will be February and will not have the true brunt of that oil spike. So with that, there will be a little bit more of a spotlight on the good old-fashioned CPI because it is encompassing that spike in oil. PCE is still important, but it is lagged a month, so both of those are two important numbers we are watching. To see what the Fed is likely going to be doing for the rest of 2026, we need to see how oil has trickled into other inflationary buckets in the world, and if those rate cuts will be paused, if we can still anticipate the two, that is something that we are monitoring for the week ahead. So short-term good news, everybody should be happy about a ceasefire. Markets are responding very positively to it and are making up a mountain of the losses that the market brunted in Q1. Again, it's not mission accomplished, it's a step in the right direction. We'll keep monitoring those facts. If you have any questions at all or would like me to elaborate on anything I talked about, don't hesitate to call your advisor or myself directly. We appreciate you. Hope that this rally continues in the market, watching a lot of those key points on your behalf. You folks have a great one, and we appreciate your business.